Hello, hello, hello. Happy Sunday, everyone. How is everyone doing? Hope everyone had a wonderful, wonderful weekend. Live from Chicagoland is PTP. Thank you, Patrick. And first, how is it up in Minnesota? Good evening, Charles. Good evening, Anissa. Might be a little quieter. Lots of key football games going on now, but that's not going to stop me from market prep. By the way, for the people willing to support the channel and becoming members of the channel, I did put up a video on a new swing trade idea. So that's one of the little benefits for the member videos. Help give some more insight into things I am looking at. Hello, Eric. Thank you for being here. Let's see if some more people trickle in. And I see there's people hiding in the background. So thank you for being here too. All right. Good afternoon, Sterling. Hope you have had a good weekend. Is your dealership open on Sundays? All car dealers are closed in Illinois. That's why I'm wondering. All car dealers are closed in Illinois by state law, which is really aggravating since Sunday's the day you have off. But I wish they'd make it like make them all close Monday, not Sunday. Oh, well. Rich, easy trading days are coming. Oh, boy. I think you're in for a rude awakening. By the way, also, besides that member video going up, the podcast, Jim Iorio Future Ed podcast, which was recorded Friday afternoon, went up. So starring this episode with me, I'm on monthly. So giving some technical analysis, key levels I am watching and thoughts. Also Bob Iacchino on that. Bob having a discussion with Jim on unemployment numbers. So make sure you tune in and at least check that out. All right. Charles, whenever it reaches Friday, I always feel drained, but by Sunday, I'm ready for another week. Well, that's a good thing. No, we're not open on Sunday. Some are, but not us. Well, that's good. You get a nice day off, Sterling, guaranteed every week. Hey, Nas Industry. So, where do we sit? This is going to be a doozy. So Jim wants 1,200. What's that? Is this a Kramer reference? Oh, no. Oh, no. New highs coming if Kramer wants 1,200. I don't know what that's a reference to just yet. Tomorrow, let's take a look because this is going to be a volatile week. I'll give you some other thoughts. I gave some macro thoughts on a lot of stuff in the podcast. So that's where we sit now. Consumer inflation. I think anything that comes out at this point we got the NASDAQ potential reversal signal. You got the reversal signal in the S&P. Still not closing above a key level though yet. But if we get anything with a hint of bullishness or dovishness from the Fed, then I think it's off to the races short term with weekly cycles at the bottom. Consumer inflation expectations coming out tomorrow. I mean, if this comes down and comes in like a 4 point something print, even though it's a minor number, the market could take it as bullish, especially on a light day. Tuesday, pay attention though. Tuesday, 8 a.m. Central Time, we got Powell speaking. So that's going to give us some more clarity onto thoughts possibly with the rate hike on February 1st. Remember, we had our last non-farm payroll on Friday, and the last one before the rate hike. Economic optimism, again, minor number, but let's say this is forecasted 43. Let's say it comes in 45, 46, 47. Market could take it as rally mode. It's going to take a lot to, Powell could throw some cold water on rally mode if he really comes out hawkish, But if anything can be interpreted as dovish, I think it's going to just reinforce. I think the markets and a lot of participants are looking to rally. Looking to rally. I think there'll be volatility, but so I would not trade without stops. Well, you always should trade with stops, but I'd give your stops a little room because we could get some volatility. But, I think with what's coming out, anything that the market can take as bullish will be taken as bullish. Wednesday, there's nothing unless you're a crude trader. I mean, mortgages aren't going to matter. Thursday's the big day. Besides Tuesday, Powell speaking, you got Thursday. What's Thursday? You got CPI Thursday. CPI Thursday. So, where we get CPI, core inflation rate. Now, we could get some base effect in the year over year, but I'm going to be focused really on this month over month. Inflation rate, headline number, 7.1 previous, forecast to drop, consensus 6.5, forecast 6.7, so dropping into the 6 handle, which, so what if it comes in at 6.8? Is that still good? It's still going to beat previous? Are people still going to rally it? We'll have to see. But it's definitely expected to come into the 6 handle, and not just by a little, by a fair amount. And there's going to be a fair amount of base effect dropping off here. You got initial jobless claims also, but the month over month is what I'm focused on. So the inflation rate month over month, headline number 0.1, forecast a contraction of 0.1, consensus is flat. Core, 0.2 previous, forecast 0.2, consensus 0.3. Well, I think this is also, so let's say consensus comes in 0.2 or 0.1. Is that going to fuel more rally? So that's really, this is the big thing. I'm expecting it to drop. But unless something wacky happens, we'll have to see with that. I'm watching for cycles to really get to the top coming in. And then Harker, we got Harker on Friday speaking well before the equities opened. We got consumer sentiment preliminary for January, hovering at that 59 level, still forecasts 59 to 60. And what's important in that, though, is people are going to key off the inflation expectations. So it's forecast to come in at about 4.4, which is in line with previous. But if that comes in better than expected, could, again, throw fire on a rally, throw fuel on the rally. So we definitely have a big week ahead of us. Market map, in case you were asleep or hiding on Friday, pretty green across the board. Last week, you had basic materials, consumer cyclical, financial, comm services, industrials, real estate, and consumer defensive all rallying. Healthcare, technology, utilities, and energy roughly flat on a week, but technology really ramping up on Friday. Fed watch is close to 76% for that 25 basis points. So climbing up steadily again. Going to see how this reacts on Tuesday to Powell speaking. Fear and greed, back to neutral mode. So we're out of fear mode, back to neutral mode. Also, on a continued rally, we're not anywhere near greed mode yet. This is just a really free, cheap, good indicator, because once you start edging up into greed, especially if you get topping patterns, watch for rollover plays. Until then, momentum can continue higher. Upper end of fairly valued. Yield curve model still very overvalued. Buffett indicator, fairly. PE ratio, fairly. So those are the major ones I keep an eye on. Now, besides that, sorry, that was from I didn't realize that was still up. Wow. Little mistake on my part. This kicks off earnings season, but nothing big until Friday. Nothing big until Friday. Tomorrow you do have, for those Tilray followers, after the close, again, not really anything. Unless you got a squeaky door, WD-40 company. Tuesday, I am paying attention to Albertsons. I am actually paying pretty close attention to Albertsons, especially what they have to say with inflation, with passing it on to the consumer, and it'll be interesting to see if their earnings are still expanding or if they're getting any contraction with that, with consumers potentially dialing back, since this is a core necessity. Wednesday just says KB home after the close. Thursday, you got Infosys. But Friday, Bank of America, United Health, JP Morgan, Delta, Citi, Wells Fargo, BlackRock, BNY Mellon, First Republic Bank. So you have you have the banks really kicking it off. You got some healthcare stuff with United Health Group. I don't even know what category to put BlackRock in, besides the trash can. So that's where we sit. Really, with Friday, could get interesting because some of these things can set the tone for the earnings season. All right, let's see. Oh, Jim Iurio. Jim wants 1,200. That's his. He'd love 1,200, but he's not going to get 1,200. That's just the way he structured a trade for downside. It's not going where, as I said, unless there's like World War III with nukes flying, and you're not getting anywhere close to 1,200. You have NVIDIA puts. Yeah, but he has a whole... Remember, listen to it. It's a whole structured trade with the Condor. That's a very specific structured trade. Those puts are being sold to finance the Condor. Okay? So that's why. Don't see, this is where people will take one leg of a complex option position and say, oh, well, he wants... No, I mean, if he considered a gift if he got put shares at 1,200. I mean, and if it was unraveling before then, he'd modify his options trade. But that was something that was used as a leg on a complex Condor. So don't confuse stuff there. That's where people go, I saw this huge options trade go off. You know, it must be bullish. It must be bearish. Let's say you don't know the person's overall, what they're doing, whether it was now legging in part of another more complex strategy, whether it's a hedge against a major portfolio. You don't know what it is. And if you do hear somebody stating, you have to take. You can't just say, oh, that person sold puts at this strike, so that must mean something. Because you got to look at their overall, if it's part of a butterfly, part of a condor. You got to look at the overall, where the wings are, where the body is, and how it's structured. So, you could, Veggie Sheba, thank you for tuning in. You have NVIDIA puts. Real quick. I was actually looking at NVIDIA earlier. Unless we get something very bearish, looks like we're going to get a short-term breakout play to the upside in NVIDIA. Unless something comes out that dumps the market. I will be watching for another rollover play in NVIDIA. But it's held so far between the 50 and the 62.5. You start, and it closed finally into the rotation zone. We have an advanced clear path. Key little areas is 153 area, but if it does get through there, you could even see a potential run if this market run has some legs on it going into earnings season. You could see NVIDIA easily bounce above 158.75 possibly. Even possibly get to 168 again if the rally's got legs. So if you start getting follow through, I consider that. And look, I don't want to change the color on that, but this is a 62.5 I just did. Here's the 50. So if this thing were to return to the major rotation zone back down from a harmonic perspective with the 200 in there, we could see if the market rallies and funds keep flowing into technology in the short term, you could easily see NVIDIA pop back there. Long term, still bearish. Long term, I think that'd be a gift for setting up another potential rollover play. Short term, that's where it gets. So if you're holding long-term puts, it really doesn't matter. If you're holding like weekly puts and this breaks the upside, you're going to need Powell to come out very hawkish or something to really cause the market some damage, which is completely possible because we are still in a tactical trading. For example, we didn't get that close above that 39.35 level. We are in positive gamma territory, which has a slight dampening effect. And the closer we rally that 4,000, the more that gamma kicks in. And you have the level 4,000 for the 200 SMA between the 50 and the 62.5 of this downturn. So it got oversold in December. Worked its way off with a little divergence. You had some daily divergence, but it moved sideways. Now it's poised to break the upside. The only negative is you got daily cycles to the top, but weekly cycles are at the bottom and starting to turn up. Okay? So I'm real focused on a rally, at least in the short term, to test this 4,000 area. We get the close above 40.33. I'm focusing on the highs from mid-December, 41.31 to 41.80. The only thing that really kills the rally in the short term is a close back below 3,800. Early warning sign would be 38.10. That's the only thing that really throws the damper on the rally. And the key level to the downside, just to reiterate, 37.55. Close below there, I aggressively tip bearish. Aggressively. Hurry up and buy week. We could get back to the, look, on that S&P, especially tomorrow, above that 39.35. Unless Powell can kill the rally with comments, you got a clear path move to the upside. You got at least the magnet of the 200. You got the first key target area. And even the clear path goes beyond that. Into there, you're talking the... I would not ignore things like the 75 for a stop reduction. But you're looking to a high area from December and back in September that could easily be tested again. NASDAQ's going to be key. Why? If we get some follow through on tech, NASDAQ from the weekly perspective still hasn't turned up though. Weekly perspective, if it triggers this double, it's back potentially to the other end of the rotation zone. You see here a weekly clear path up. On the daily, you have the 50. I'm watching for the close above 11,200. It has not confirmed or triggered yet. Now, this would be one, if we get strong momentum tomorrow, might have to be front run. And then if it closes above the key levels, then it's held. First target corresponds with the 50, 11,400 area, 11,393 to be exact. Second target happens to correspond with the breakdown. So you have the consolidation. Then you got the breakdown from mid-December. And that happens to be the second target on the double, just the way it works out. Third target, 11,605. Okay, this is a long way off from the 200. So that's the little bullish trade. Now you get a close above 11,743. We could definitely see a retest of the 200, which would take it into the high area from mid-December. What damages this? A close below 10,700, 10,715, a little in front of that. That's what damages it. Now, if we start getting down below here and turn this into a triple, my spidey sense will go up. Expectations on the SPX after Q4 earnings. Let's see how it plays out in the Q4. I expect Q1 earnings to be worse than Q4. But let's see what the market does because we're in tactical trading mode. Hey, Mike, thank you for being here. Mike the Numbers. That's what your name is. Mike the Numbers. So, heard it. He is a broken wing butterfly up 50 and down 150. I was making a reference to your comment back to him, and that was your oh shit number was 1800. Yeah, that's my oh crap number. Hey, options 22. Good evening, CD. Hey, Strategy Freeman. Great job on the Futures podcast. That's all. Carry on. Thanks. It was slow at work, so I had some time to look through an IVR list and found some decent long-term patterns. Good. Good. We can take a look at some of those. All right. Dow, I just wanted to touch on something also. The Dow, I'm still watching for a key level coming in with this 34,377. But on the bigger macro, remember, which I did not touch on in the podcast, I will touch on it here. Remember. Let me clear up a little this chart. Here's your 62.5 from the longer term. We closed above it. Back at the end of October. We've actually not closed back below it since. I'm talking the retracement from the all-time highs back to the beginning of October lows. We've retraced and held that area pretty well. Okay, Friday you have another 62.5 from this little retracement. But why that is key. Probability-wise, we should still see the Dow re-tackle the 35,800 area. Okay, we ran up to the 75% harmonic and then sold off. But if this rally continues, it might shock a lot of people, but the Dow could easily return. There's still the probabilities in the Dow. Now remember, the Dow's only 30 stocks. And the Dow was on launch mode from October. Especially the double bottom pattern. Launch mode. So, first off, the Dow on bullish plays, unless something changes drastically, that's the first one I'm looking to. Why? Because of its outperformance and that gravitational back here with the harmonics. So we could see some pretty decent up moves in the Dow. Also, if you remember, the Dow really in the .com bust right before it was the last thing to really, really roll over to solidify the end of the .com thing. So, yeah, technology could rally, NASDAQ could rally, S&P could rally, but Dow could retackle its high area. But it's just a little sliver of the market. What am I watching for short term? As I said before, follow through 34,000. Then I'm watching to go to 34,400. Above there's minor stopping about 34,650, but that wouldn't be surprising to see 35,100 taken out if it gets into launch mode this week. Dow cycles still at the bottom and confirmed turn up. And look, we remember first cross the rotation zone, pulled back into the weekly rotation zone, catching on the 50-week also, rotating back up. There we go. So we could get a nice little rotation play. Could this eventually turn into a potential double top play? Yeah. but it's going to take a retest of the highs from mid-December. I'm really focused on watching that Dow. Russell actually solidifying above this breakdown level. I'm watching targeting the Russell 1837 area, return to that 200, and you have a secondary breakdown level right here. So that's my short-term targets in the Russell. Russell doesn't really get overly damaged till back below 1732. DAX, no, you don't have a double yet here. I'm watching for a key topping pattern on a longer term basis to coming with the DAX. You still got our cycles rolling up on the weekly, very overdone on the daily. So this either has to consolidate up here. The only thing that I'm watching for to do some technical damage is a close back below about 14,200. Otherwise, I'm watching the choppy to bullish still. Notes. Continuing to watch for this follow through, catching back between the 50 and the 62.5 with the launch move. Going to pay close attention to this on Tuesday with Powell speaking. Other than that, watching for a retest of the high area from the beginning to mid-December. If we do break above that high area, my target is between, this is a longer term rollover zone, between 115.13 and 117.01. So I'm targeting 116.10, the weekly 200, which would be the first reconnection with the weekly 200 since back in August of 21. That's how long it's been. Dollar index, I'm focused. If we break below 103.08, that will give the equity rally some more legs. Pretty substantial outside key reversal on Friday. So you see running up and then closing back below the opening price from Thursday with an outside range day. That is a pretty bearish candle since it was in breakout mode and then completely smacked down. So I am watching for a follow through to the downside to take out the 103 area. That's also where I'll use these short-term harmonics. These are just for a breakdown play, especially 102.50. And then the next key target area is 101.95 to 102. VIX is just right now. Pretty decent reversal on Friday. Gonna watch if it gets back down here. It will create a triple bottom though, and the potential double, which never come close to triggering, is off the table. Crude, as I said in the podcast, I am watching for the double bottom trigger. That's the thing that gets me minorly more aggressively bullish at this point. And I think I had these technically in an incorrect position. Yep. So it's not going to be far off, but the levels need to change. 87.21, 90 is key. Harmonic cluster there, and then 92.92, right in the area from the October top and the November top with the declining 200. So that is what I'm key focused on. Even if we pull back further in the short term, that's what I'm going to be focused on. Because this was the second target area from that massive weekly double. The only thing that will really tip me short-term bearish if we break below 70 at this point. Natty gas coming back down to the next harmonic. That was the target I was utilizing. So I'm watching for a slight potential bounce play at this point, but not aggressively bullish. Gold, still it's in a trailing mode, watching for a topping pattern, but trailing. at this point, not aggressively adding to, and this is not aggressive add mode yet. There's major resistance coming up here overhead. Now, my thesis is for continued bullish price action, especially above 1906 on a closing basis. I want to see a decent pullback. We're getting into pretty overbought area. That pullback's going to tell us a lot from a technical perspective. You can see even weekly severely overbought. So watching for that pullback in the weekly rotation zone to hold. We don't need to go through silver and copper right now. Euro. Remember hitting that first target with the double and an outside key reversal day. So I'm watching for a return to 107 to 107.20 in the euro, and then 107.87 to 108. Pound. Key reversal day, outside day, closing back above the 200. So I'm watching for a continued rally in the pound. The short-term targets I'm looking for between 121.40 to about 122.20 are my key short-term targets. Japanese yen, which we had another roll down play. My next key thing after hitting this back to kiss line, the neckline goodbye. Watching for a close below 131.48. Why we close back below that favors a retest of the lows, and then I'm focused on a break of those lows with my next target being 127.25 area. Bitcoin still completely asleep. Tesla, with a bullish market, I'm watching for some follow through. You had a up move even after the slash prices, and you know the Tesla bulls will say it's quite bullish. They're slashing prices. That means they'll sell more cars. Yes, they will sell more cars, but at much lower margin. So that comes out when not necessarily in the car sold thing, but it comes out in earnings. But from a technical perspective, we could be setting up with cycles at the bottom. This is a pretty aggressive bottoming weak signal, and we start getting above last week's high of 118.80. It could be triggering a weekly % buy from oversold conditions. So this could be played on an intraday basis above 118.80, and then a close on a weekly basis of that gets to be held to a return to potentially the weekly rotation zone. If not, possibly the 200. So could Tesla form a bull move? Yes. However, the first key area I would be utilizing would be this 135 on a rung, which would be the daily rotation zone. Mike, when I draw the forward extensions on a trending stock up or down, where you draw the starting point, and sometimes I see stocks trending consolidate, then continue the same trend. Yeah, which is a point. The harmonics gives us not necessarily a reversal area, a target area. A target area is where you take an action. And it could be setting up for a reversal, but it could just be an action where we get a pause. Remember, there's two kinds of corrections. What are the two kinds of corrections? Both in down markets and in upward markets. You get sideways or retracements. So when key levels are hit, it means, look, I can be using them to come up with a time to raise a stop or lower a stop from a bear market. Time to unwind something at a really key harmonic level and raise a stop. Hey, we're trending strongly. I think I touched on that on the podcast. I went into this with how it gets there is important. So you know I have my key levels, which is important. Okay? But how we get there is equally important. Why? As I talked about on the podcast, so I'm not going to reiterate it all now. Tune into the podcast from the one that was posted today, Jim Iurio's Futures Edge. Because in a strong market, major strong momentum, if it gets to a major target in just 1 or 2 days, that's like a stop raise. Hey, I'm not going to pull the whole position off. This thing's exploding. Versus it takes 2 weeks, that's a different story. It's grinding higher and can barely get any momentum. Very different story of how it gets to a level is equally as important as that level. The level identifies a key thing to watch for. Then how it gets there helps us navigate our trade. The other important thing about having levels is it enables you to come up with targets for calculating reward to risk. If you can't calculate a reward to risk ratio, you have a problem. And I'm not going to get into that now. Rich thinks the futures will rally to close the gap, specifically. From the consolidating point or front of the initial start of the greater trend, preference 1 hour, 4 hour, are you asking what I prefer to use to draw harmonics? I prefer higher time frames are always more important than lower time frames. So I would prefer the 4 hour. Let's see. On the Tesla, can I show how I would draw the forward extensions? At this point, sure. At this point, for the last swing, here, let me just go in on here. So this, for the downwards, here was the last major pausing bar. This might become the new pausing bar. But here was the last major pausing area. Okay, at this point, if this becomes a pause, wasn't strong enough yet. This was the pausing bar. So remember, we used a long-term one. And in this point, since there wasn't any major pauses, I'd use the reverse harmonics for my short-term levels back to there. I would have used, see, little reaction right in front of there. Then it dipped below it, but a reverse reaction. Now, if you're using the shorter-term time frames, here's another great example. So let's say I'm micro-trading this. Here's my 4-hour chart. This was a key pausing area. So those would be my micro levels. All right. If you're weekly or even day trading swinging this, these levels don't matter. If you're intraday, they could matter. All right. Now the bigger area, those would be the real micro levels. The bigger area would be at this point, if we break above this 124.50 area, this two top area, here would be my next key areas I look to take it, especially 130.13. Why there? Because look, you're into a clear path. All right. So this gives me an area. Hey, I'm into a clear path. This could get a run on. This could start running, especially to the other side of the daily rotation zone. But what does this give me now? This gives me, especially the second level, this 130 area. That's a great area to raise a stop for a bigger play. All right, so just as for example, when you have something coming down, you can use the most recent swing and a long-term swing for harmonics. Well, we keep a really close eye on Apple. This is a horribly sloppy pattern, but we could easily see with follow through on Apple, which is one of the mega caps could lead to a continued little thing, especially if it can get a close. If Apple can get a close above 130.50, we could easily see a continued pop in Apple to the other side of the daily rotation zone at least. Nat gas November through today looks like Tesla expect a bounce. Well, two very separate markets there, but this is setting up a substantial potential just reversal signal. Where would that be? Where would I be watching for a snapback to the daily rotation zone and possibly to the breakdown zone? Again, do I have confirmation yet? No. But we are in oversold conditions on the daily. We're in oversold conditions at the weekly, and we're getting to the weekly cycle bottom. And we've come back to another harmonic area and the weekly 200. So does that mean the bear market's completely over in natty gas? We should just fold it up? No. What that means is getting to a potential weekly bottoming cycle area, weekly oversold and weekly divergence, lower low, higher low RSI against a very key area, weekly 200, 75% harmonic, prior bottoming area from back in December of 21 and just above a breakout area from November of 20. That is why I'm watching for a short-term bottom. The aggressive trade would be on a daily close above Friday's high to return it to the bottom of the daily rotation zone. Could it go beyond there? Yes. But that would be the first target area. Does it have to trigger tomorrow? No. Could we form a bigger bottoming pattern? Could we break lower? Yes. But this is a very key area. It could theoretically test it again, try to suck people into a breakdown play. But would I be getting aggressively short here? Not on your life. This is a great area to cover these shorts and watch for the bounce play. Or at least aggressively trail a stop. For example, from trailing a stop perspective, we get a close above Friday's high, I'd be taking my profits off the table and looking and being patient. Look at this short-term breakdown zone. Short-term breakdown zone paused here. You see this little pausing area? And then, phew. So that would just be within, well, this is going to keep pulling down, but that's, my first target area is about 429. The next key target area is about 495 to about, I'd say 480 to about 495. And I'd implore people to not tune out. I don't care if you don't trade natty gas or whatever. I don't care if you don't give a damn about natty gas. A chart is a chart. Learn to analyze a chart. If you learn to analyze a chart, you're better off. That's why some people tune out. I don't care about that. Doesn't matter. Learn to analyze the chart. Listen to the analysis on the chart. Look at the key things that jump out. I don't think it's really risky to trade. Now, if you're trading a full contract, you better have a decent account size. Oh, I think bounce long term. KEA, thank you for tuning in. Long term, people know. Back to Tesla, and I don't care if you don't trade Tesla either. Long term, I'm watching for much lower price in Tesla. Much lower. However you got it, watch the technicals. Why? Because it's not going. It's not going to the next key target area of 62.55 in a straight line. It's not. Remember, it bounced off the first target area. The people, it's not getting to 106. There's no way it's getting to 106. People said it was a good buy up here at 180. It's not getting to 106. 200 was a great buying level. It's no. Okay. Just like there'll be a bunch of bears that come in if this rallies back to even 150. Why is it rallying? Well, because it was oversold and you got people will keep trying to buy this dip in Tesla until they're, people mortgage their house that they paid for to buy more Tesla down here and avoid good. They got margin called. People are just going to keep, this is going to be another one of those widow makers long term. This is going to be a widow maker. How many of these have we seen? So let the hate begin, because I'm bearish on Tesla. But how many of these have people, it's not going there. It's not going there. It's not going to retrace. Hood's not going back below $9. Okay. BBBY is not going bankrupt. Yeah, it's going to file for reorganization. So everybody hoping for the other pop there. Sorry. Look. Voop. I mean, Coinbase was never going to hit $40. Sorry. It did. It's actually trading below there. AMC to the moon. It's never going to retrace. I remember here when it closed below 1746. It's not going to get back down to 660. Sorry, now it's at 385. Oh, but Tesla's a solar, self-driving, automated. I don't know what it is anymore. Let's see the comments light up. It's just the chart patterns. Just don't get caught in something and think it has to return. Especially vertical up, vertical down plays. And no, I don't think Tesla's going to zero. I think it's got a lot of faulty accounting. But I think longer term it will be more in line valued as a more traditional automaker. What other great plays do we have? I mean, it's not just recent. Remember, you had insane play. It's nothing. I'm not picking on any of these companies. I mean, you've had insane plays even. I remember this. I remember this perfectly well. Here's one. Qualcomm. I remember people buying. Qualcomm's going to 200. Qualcomm's going to 200. Qualcomm will never get back below $20. Oops. Didn't say things can't recover either. But you had this absurd pattern. Okay? Absurd pattern. You get the silly moves. The silly moves. Cisco going to the moon. Huge tech company. It just, the valuations didn't stand a chance with the valuations. Vertical up, vertical down. Eventual recovery. Took a long time. That's why become a student of the markets. Don't get married to a stock, a market, a position. It's always different, though. People say it's always different. And there's a rare instance it is. But when you have price pattern and fundamentals way, way off the chart, silly, it's not generally different. Ted got crushed in Cisco back in 99. See, Ted remembers it well, I bet. Hey, Ted, I still know people. I've talked about that before. I still know people holding Cisco because they're not willing to take a loss. They're still underwater. They're still underwater. 20-something years later, they're underwater. And they're like, it's not a loss until I sell. Well, okay, you held on to a loser for over 20 years. That's not a good position to be in. Not a good position. Ted lost 90K in options. How's Intel doing? Intel's got a potential double bottom play for the bigger term. It's been rallying off. Remember, it closed back below. I flipped the harmonics around because the next little key area I'm watching is 29. 20 close above 29. I'm watching for a return to 30.59 to 31.34. A close above 31.34 triggers the double bottom pattern. Now this came down and it pretty much exactly tapped. This is why the harmonics are so important. Gives you a roadmap. Look at this. And this did form a little mini double. Look. 87 half harmonic. Little double. Boom. Trader on the core position. That's how Intel is. I actually think over the next few years, it'll be better to go into single stocks again than indices. For the last few years, it's been better to go just in an index than a stock. I think that's going to reverse because I think for the next few years, yes, you'll get rallies, you'll get sell-offs, but it's going to remain in tactical trading mode for some time. So some of the best opportunities are going to shift to individual stocks again. So from my perspective, you can always, hey, if we're in rally mode, yeah, throw on some spiders, throw on some Qs, throw on some diamonds, but I would not allocate a full portfolio. Some people are just allocating full portfolios to the indices. I would also be allocating part of your portfolio to key stock plays. That's my perspective for the next few years. Because you're going to enhance, because you're still going to go overall into choppier markets. Charles, focus on, here's another great thing for people focusing on stocks. Too many people don't look at a weekly chart. Look at a friggin' weekly chart. It's a lot less noisy. It's a lot less noisy. I love looking when we do our stock products, focus on weekly charts, weekly rotation zones, weekly key levels, and then fine tune it with the daily. It'll keep you in things a lot better. By the way, this Intel double bottom does not have to trigger. It is very key, though, because we could be getting to a more substantial bottoming position in Intel. Or at least a choppy range trade in Intel, which is fantastic for trading around the core position. All right. What's the secret word for tonight? It's tactical. It's got to be tactical. Tactical is the secret word, Stafford. Did I cover the, hey, Strategy Freeman, thank you for being here. Did I cover the 10-year Japanese bonds? No. But they're going to have to keep. This is one of the things. For the sell-off on Friday, gapped well above that 50%. Remember, that's the new peg. You see the old peg at 25%. Kept chipping away at it. Eventually, they had to repeg at 50%. What happened on Friday? Way above 50%. And again, more buying. They've had to keep buying. Got it back to 50%. Keep a very clear eye on this up here. Why? Because if this peg breaks and they have to repeg again, like the 75, you're going to see a rapid decline in the yen. That's why this JP10Y chart is up here, because I do glance at it for a peg break. Thank you for pointing that out, Strategy Freeman. Yeah, good point, Daniel. Love weekly. Monthly leaves out too much. It can be a little too macro. It's handy to look at, but weekly is a great way to longer term trade stocks, and then fine tune it on a daily. People don't look at weekly enough, in my opinion. They get caught up in the day-to-day noise. Well, that's fine. Trade futures. Don't care what you trade. Just give them. I don't know who's in here. So people trade a whole bunch of different things. And there's lots of different trading opportunities, but being able to analyze a chart is key. Whatever you're trading. All right, with that, I am going to call it a day. Been an hour. Got some stuff to still do. Get it done before the weekend's over. I will be back. Remember, the word of the day, thanks to Stafford, is tactical. Tactical, the word of the day. And with that, I'll be back in the chair at 8 a.m. tomorrow to see how this overnight price action is. And we will go from there. Wanted to do a little more macro perspective. Key support, by the way, if you're trying to look at the overnight stuff, or if you're in Europe and playing some of the overnight stuff, is about 3,900 in the S&P. Just that's the key pullback level that I am focused on. Minor, if we gap up, is 3,917. Majors 3,900. And I shall leave it at that. You are welcome, Charles. You are welcome, CD. Oh, you want me to look at CARR weekly double top? Hold on. If there's a bunch of, hey, Sterling, if there's a bunch of stuff you want me to look at too, for some stocks, put them in my private, get them to me on Discord in my private handle, or put them just on Discord to make sure I'm tagged, but and we can look at them in the next few days. Yeah, you got the weekly double trigger and come back with the rotation move back up. So there you go. So we'll see how that one plays out. By the way, the I always put out the conservative stop level. People are welcome to always have more aggressive stops. I like to give the pattern that invalidates, or the stop that invalidates the pattern. People wonder why you put stops so far away. They don't have to be there. That's the level that invalidates the pattern, so that's the most conservative stop level. Look, for a tight stop, let's say you were playing this, all right, it barely triggered. I'm waiting for a pullback. I mean, easily, if you're trying for a big reward to risk, you could use a stop right below the daily or the weekly rotation zone right here and keep a really tight stop. By the way, this was a percent B buy with a rotation up. So, can a stop for a trade be used here? Yes. Do you have to wait to here? No. However, let's say you try an entry and it comes down. All right, it stopped me out. Comes back down this 50%, then goes into launch mode. That's fine. But the pattern's not invalid. You can still use these targets. So remember, tighter stops sometimes can lead to a stop out or two. But if you're saying, let's say I have a trade that's 10 to 1 reward to risk because I used a stop and I get stopped once and then it sets up again, could I get back in for another 10 to 1 reward to risk? Yeah, I took a little stop. But look, I took a stop, but now I'm back in the trade. The second time might work, and I still have a 10 to 1 reward to risk ratio. So if the second one's the winner, yeah, I'm 50-50 on that trade, but one of those 50s was a 10 to 1. So think about that. You took a 1 unit of loss, and then you got back in and you made a 10 unit of win. So overall, you're fine. Some other people don't like to get stopped out or like to give it more room, so they keep a bigger stop. That's why I like to teach the level that invalidates the pattern, and then people are welcome to structure the trade according to what their risk tolerance is, the way they like to structure trades. So that's why I go through. Some people go, well, that's too far away. Well, you don't have to use that. That's what invalidates a pattern, though. So that's where we sit. Well, also, it doesn't matter how much heat you can take, because I'm going to point something out. People say, well, that stop's too far away. I'll lose too much money. You trade smaller size. Remember, you have a risk per trade. So your risk should be pretty consistent across trades because you don't know which one will work out per strategy. It can vary per strategy. But you don't trade one double and say, I'm putting 10% of my portfolio on this one double, and this other one you put 1%. What if the 10% is the loser, the 1% is the winner? What have you done? Okay. So if you take a wider stop, you reduce your position size. That way, you can get stopped out for the same. All right, thank you, Sterling. With that, I will see everyone tomorrow morning. Thank you for tuning in. Bye for now.